Hello all you beautiful people out there, and welcome back to the channel Pris Novis here in Sweden. Today in this episode we're going to talk about rebalancing. And what is rebalancing? Well, when you bought your assets or when you started investing, really you chose a balance between, for example, stocks and bonds based on your risk tolerance. And so rebalancing is really something you eventually will come across because the different assets can appreciate and devalue in price at different rates. So when your stocks go up and your bonds go down, you need to rebalance, because otherwise you will end up in a situation where maybe you are 90% stocks and 10% bonds, whereas your original investment or your strategy was to have 60% stocks and 40% bonds. The second reason why we rebalance, and there are many aspects of how often to do it. Some studies show that every 3 months is a good idea. Some people say once a year, some people say twice a year. No matter, you should do your own research as always. Find out what you think is most suitable for you and read up on the different cases as to when, how often, and why. Also remember that if you own more volatile assets that move around a lot more, chances are you will have to rebalance more often to stay within your own risk tolerance. The second reason why we do rebalancing is also because it's one of the very few free lunches, as it's called, in investing. There is the old saying, buy low, sell high. That's how you make a profit in stocks, excluding dividends, obviously. But that is tremendously difficult. And again, look it up online, just search in, timing the market, type it into Google and see what comes up, and you will find that it is damn near impossible to do so. No one in the history of ever has been successful timing the market over a long time period, which is why, again, we stay invested. Now, what rebalancing does is the assets you own that have increased in value, you sell off some of those and you buy the assets that have gone down in value. Or in a more perfect world, right? Your stocks are up 50% and your bonds are up 5%, still both have gained, but not equally. So you again bring down the stocks and you bring up your bond position. Obviously this works with many different types of assets. You could own REITs. I know in America it's quite common to own these real estate investment trusts. You could own commodities, oil, gold, silver, copper, you name it, electricity, water, wheat, grains, what have you. And so rebalancing is just a way to make sure that you keep the original investment safe. And also consider the fact that no matter the strategy that you use, whether it be individual holding in stocks, individual stocks that you own, or it could be you own mutual funds or index funds, or whatever specific type of strategy that you choose to use, remember, rebalancing works in all these cases. If you own stocks and they go up, and you own bonds and they go down, you rebalance. If you own an electric company and you own a car company, and you also invest in some mining companies, again, rebalance, because these are different fields of work. Take a look at the risks of each of these different assets and holdings and make sure that you rebalance. Do be aware, however, that there is one particular case where you should not rebalance, sell off your winners and buy into the losers. And that is if you belong to the school of like super long-term Warren Buffett style investing, where you pick 20 stocks during your whole life and you keep them until retirement or whenever, right? You chose those stocks because you had an idea and you did the homework, you studied results, you did all the paperwork, and you figured out, okay, this company is going to be super massively valuable even 50 years from now. Then you should not sell. Me, personally, I do invest in index funds, and so for me, rebalancing comes sort of naturally. But consider your particular case, and again, as always, there's plenty of information on the internet. You can find it all over YouTube. Just type it into Google. You will find information on what type of investing you are doing, what you're comfortable with, and if rebalancing is for you. But typically speaking, most people need to rebalance their portfolios eventually. All right? Now take care, guys. We'll see you in the next episode.